Hello and welcome to Dona Chien Investment. This analysis is for Merck Co on the New York Stock Exchange as of 25th of July, 2026, with a share price of $131. The full report is on donachien.ca. A hold at $131.07. A cheap, high-quality pharma compounder that has run to a 52-week high. Short-term, this is a hold, and the prior short-term buy banked to win. Medium and long stay buy. The 2028 Keytruda patent cliff is the thing to watch. Merck's headline PE looks alarming because a large one-time acquired research charge pushed reported earnings into a loss. Strip that out, and the picture flips. On clean forward earnings, it trades around 14 to 15 times, cheap for a high-quality pharma with a strong balance sheet. Valuation scores 66 and quality 68. This is not an expensive stock. It is a fairly valued blue chip with a specific, well-flagged overhang. Keytruda is roughly 45% of Merck's drug sales, and it loses US patent exclusivity in 2028, after which cheaper biosimilars and rival drugs compete. That is a genuine, known headwind. The bull case is that the pipeline backfills it. Winrevair is ramping fast, up around 88%, and a subcutaneous Keytruda plus other launches aim to defend the franchise. Analysts actually model earnings growing through the cliff. We treat it as a scored headwind, not a reason to avoid the stock, but it is the number one thing to monitor. On timing, the stock is at a 52-week high and the breakout came on light volume, so a fresh short-term buy needs the tape to confirm, and it hasn't. That is why the short call is a hold. The prior short-term buy we flagged already worked well. It ran into the mid-teens in percentage terms, and this hold banks that win rather than chasing the same move. For a fresh entry, wait for a pullback or for the early August earnings to clear. The balance of risk centers on the cliff. If the pipeline underdelivers or a rival immunotherapy takes share faster than expected, the 2028 revenue gap becomes a real earnings problem, and the multiple compresses toward the bear case around $108, roughly 18% below today. Second quarter earnings also land in early August. Set against that is a cheap, clean multiple and a defensive, cash-generative business, which is why the medium and long calls remain buys. Now weigh the risk against the reward. The bull case is roughly 14% above today, the base case, the most likely, about 8%, and the bear case a fall of about 18%, so you are risking about 18 to make 14. So, our call on Merck Co on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donachien Investment at donachien.ca. The link to the full report is in the notes below. Have a great day.